that is right, but I don't know how you analyze it to tighten it up so you catch a big one or you get out early and or whether it's just one of those things that if it follows the rules in the long term, that's what it's there for, just to make money in the long term. Because the problem is, isn't it? As soon as you start, the more parameters you add, the more you got to think about it.
Yes, absolutely. Look, it's just a matter of, and I will in 2 weeks' time, just stop trading it and sit back and have a look and see what the charts told me for the last 3 months.
Yeah,
And they'll tell me something, whether it's okay, you're trailing on the wrong chart, or whether you whatever you're doing. And we've definitely got to add filters, like don't trade into resistance or support that's obvious
yeah,
and strong. Soft support, soft resistance, no big deal. But you just can't trade into strong resistance and hope to
yeah,
survive, long term, because it
yeah,
just doesn't work.
yeah, yeah, absolutely. And maybe it's one of
I
those
mean, we
things
know.
that there's no pound trade today, for example. It's one of those, isn't it? Um,
Well, I can't see how we could actually, in all seriousness, trade that candle.
yes, yeah.
I mean, that candle on an hourly chart is now what, 53 pips and moving.
Well, I have taken a trade in the FTSE this morning short. So let me show everybody that briefly.
Hey,
Um,
okay. Are we live? Did I swear?
no, he didn't swear.
That's good.
No, he didn't swear.
I'm a good
Um,
boy.
here we go. Let's show my screen. So we're right on the monthly pivot. Now, I do kind of anticipate us kind of drawing back and going again, but I'm kind of looking at the bigger picture here. So I'm just starting to get the shorts back into play. I think nice bounce really from the lows. Decent decent move back to the upside in the FTSE 100, but I'm looking at the market drifting back down again. It's one of those things. The pressure seems to be off right now. It's so interesting with any stories, isn't it? Because the coronavirus has driven the market down, but I guess fundamentally we haven't really had the numbers that suggest that it's having the impact just yet. So everybody's quite happy to continue to trade long, or use it as a buying opportunity. But I just don't see this as a buying opportunity just yet. In saying that, I think short term, there's a chance that we could get up to around. We could actually get up another 100 pips from this particular point. I don't think going into this area and testing this point here, which looks like the obvious level of support and resistance along here. You can see that was support. It became resistance. The gap there as well. So somewhere around this area, it wouldn't surprise me at all to see the market up there before actually coming back. But decent recovery so far. I'm just starting to get in really, but the key is to go in pretty light. So I've gone in light here. I'll go in again here, and if it goes higher, I'll go in again. There's probably maybe the closing of the gap is my last point that I think that we can probably trade short. After that gap has closed, maybe we start to look at the long instead. Maybe we start looking at the moves to the downside as a buying opportunity instead. So, but yeah, for right now, mate, I'm still short this market. I'm not going to be looking at a long until I see this low tested again.
Yep.
If I get
Okay.
if I get one more bounce down here, then I'll look at the long. But otherwise, I'm quite happy to start scaling in for shorts. Do you want to quickly get to the pound trade?
Let's get to the pound trade.
Great.
And gee whiz, when I look at the chart, I think, my goodness, how can you trade this? You can't trade that candle. This is super hyper overextended now. You've got to be thinking, I can't go short here. I can't possibly go short here. But we don't have those filters at the moment. So what I'm going to do here is I will place the order, but I just seriously, I can't waste any any more of Paul's money. It doesn't make it. I shouldn't laugh, should I?
Well, you're
I,
still safe with it,
I was,
mate.
yeah, we're still positive, but yeah, gee whiz, we got a decent one yesterday. A
Yeah.
little bit, could have been a little bit better, but Let's see. I'm only going to trade this at half risk again because I think it's just crazy to trade this short at full risk. It doesn't make any sense to me at all. And the level will be 1.2930 will be the entry for the short. $1.2930. Again, for those of you who are just joining us for the first time, this is a beta trade adventure. Let's call it an adventure. And what we're trying to do here is catch the breakout of the pound US dollar. Well, guess what? It's already happened, and that's very much why I'm completely reticent to go short here. But we're trading it both long and short, so let's see how we go. So that candle's high is at 1.2995. We're going to go 15 pips above that to 1.3010. I'll actually go to 3011 because I like to round it up. And that is that. So we've placed the short order in the markets, and its entry, which you can't see, but it's down here, 10 pips underneath the low of that candle. Stop loss is 15 pips above the high of that candle. Now that's a crazy place to put a stop loss, in my humble opinion, as well. So if I was going to filter this to either common sense or resistance levels, I would use the swing here, or I would even go so far as to say that's probably the safer place to place it, above the daily pivot by 10 pips. But they're not the rules at the moment. We've got 2 weeks to go in this on the 3 months trial. And if we happen to come up with some nice filters, which I'm hoping we will, where we can dramatically increase our win-loss ratio, which has suffered in the last 4 or 5 weeks. In fact, it's had a terrible run after having a good run into Christmas. So that's the short. Let's have a look at the long. The long will be the reverse of the shorts. So the entry level, and I've forgotten already, 1.3011 from my memory bank. So buy stop at 1.3011. Stop loss will be 1.29. No, I've definitely forgotten that one. Show me. The low of that bar was right. So it's 1.2930. What's happened here? Oh, okay, got it. 1.2930. There we go. Again, half risk. Half risk is probably even too much on this trade, but we'll see how we go. Look, my fear is that we're going to get taken in here, and we might even go, another 10, 15, 20 pips. But then it's, in my humble opinion, this has to stop or turn around. And of course, that won't make it stop or turn around. It can do what anything can do at any time. It can go 200 pips in the next hour. But, the likelihood of that, no. Probability is the thing that we're looking to trade here. And it is not probable that this is going to go a long way short for a long time. And that's what we want. We want the long time. So yesterday when we got in here, we got all of that on our 15-minute chart, trailing on a 15-minute chart. And Ash, I think we were just a tad unlucky. We missed out on getting the rest of that move because our stop loss moved to here above this doji bar, and that hit it by like less than half a pip or something like that. So we missed out on trailing it right down to here. So we would have got another. Where did we get out? We got out there. So we would have got another. Where do I just find that there? Another 60 pips. So nearly doubled it. We would nearly have doubled our profit on that. All but for that little retracement there. What a damn shame.
Yeah, that is a
That,
shame, mate.
but I hasten to add that we need to get a few more of those to catch up with January. So let's hope that is the case. So that is the
Yes.
pound trade, mate. There's really nothing more to that than to wait. And once we do get taken into either the short or the long guys, we'll cancel the other, and we'll trail on a 15-minute or two 15-minute bars. So for those of you not aware, once we get taken into the trade and we see two bear bars, if we're short, then we move our stop loss to the high of those two bars. So in yesterday's case, when we got taken in on this bar, once this bar formed, we would have moved our stops to here. Then once this bar formed, we would have moved our stops to there, etc., etc., etc. So that's what you want to see. You want to see a lot of same color bars going in the same direction. That's that's of course that's what we want to see every time we get into a trade. But in this case, we're trailing on a 15-minute bar, so we want to see two of them, and then place our stop loss above the two, as we did here, and just got taken out by the proverbial freckle. So that is that.
Yeah.
You want to have a look at some currencies, mate?
Yeah, well, I think, while we're on the pound, if we've got a little bit of time, why don't we talk about the pound and what's
Yeah,
currently
sure.
driving it? Because the pound, let me sort of, oh yeah, let's look at your screen now. Interesting, really, that yesterday's move was, what it was, because we've seen a lot of upside, with the pound. We've seen the pound boost itself up because the numbers started out not being anywhere near as bad as firstly expected, and that drove the pound higher. And particularly when they left interest rates on hold, I think initially the speculation was that we were going to get an interest rate cut, but that just didn't materialise, because the numbers from the pound actually, as I said, the numbers from the UK were okay. They weren't stellar by any means, but they were better than expected, and then we ended up getting a hold from the Bank of England, which was about 5-2, I think, the votes in the end. So a fairly definite
It was
definite
fairly definite. Yep.
yeah, a definite vote on the side of leaving interest rates where they were. But yesterday, Boris Johnson set out his stall again, of how he was going to negotiate with the EU, and fear has kicked in again that this no deal Brexit is really back on the cards, and yet again it's going to be driving the pound, and subsequently that's taken the FTSE lower. Sorry, that's taken the FTSE higher because of the weakness with the pound. But nothing.
We spoke about this, Ash. Among the many conversations we had around Brexit, we spoke about what would happen when this deal actually goes well. Sorry, when Brexit actually happens,
Yeah.
doesn't that put the ball straight back into the Eurozone's court, because they're holding all the aces.
Who, the Eurozone?
Yes.
I don't know, mate. I mean, we trade sort of, we got a deficit, a trade deficit with the EU of the tune of about 90, it's either 90 million or 90 billion. I can't remember, but somebody said it yesterday. But it's a big number, So we are actually in a trade deficit with the Eurozone. So I suppose to a degree it would appear that that they would hold the cards, but I don't think that's quite. I don't think it's quite as clean cut as that. I think that the rhetoric really, when the EU debate was happening in the first place, and the levers argument was all about the fact that the Eurozone, the businesses in the Eurozone, the German businesses and the French businesses would come together. The Dutch businesses would come together and make sure that there was a deal done, because it would affect them. It would affect their GDP. So I think that probably still stands. So I don't think it's quite as clean cut as saying that anybody really holds the cards. The smaller businesses in the UK will struggle if there's not a deal with the EU. But I think the bigger businesses in the Euro bloc will struggle if there's not a deal as well. So So there is, I think, on both sides some element of a fairly strong hand. I think the difficult
So,
thing.
why is Boris Johnson so bullish? Why is he so okay? We're going to make this work better than it ever has. Blah 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 blah. Has
Well,
he got secret deals going on with Russia, China, US that we don't know about?
no, I mean there is this deal with the US. Just incidentally, mate. While I speak, let's make sure that we get. There's one more trend line that if you could pop on your chart, that'd be good. The one at the low of the 3rd of September, 2019, then going up to the 7th of October, or in and around, and that shows you why we're bouncing at this particular point. So the
Okay, we're down here somewhere.
yes,
Up
and then
here.
just along there. That just tells us why
Yep.
we're bouncing where we are. So the
Apart from this level and apart from the bottom of the range, there's a whole
yeah,
lot
I mean,
going on.
there's a few things there, but do you know what that suggests to me? And I was going to bring up what's going on with the pound, because while everybody's kind of panicking and getting in short, be very careful, because tomorrow we have a services PMI number, and services are the industry that is matters the most for the UK. It makes up the larger percentage of our GDP. And I did hear yesterday that if the UK can do this trade deal with the United States, then services might be part of that deal. That they might be able to kind of get that into the United States market. So I think that's what it comes down to. Now, if we focus purely on the economy, I still can't see how not doing a decent deal with the EU can be good. That the EU seem to be doing deals all over the shop with all sorts of countries. So having access to that market is quite key. But in saying that, I still wonder whether the sovereignty and the control that we actually have brought back to the UK actually becomes more of a factor. I mean, that was certainly one of the factors for many people, and people. The argument was people didn't vote to be poorer, but I wonder whether they did. I wonder whether that actually matters as much as having control of your own nation, which actually I do think is, from a personal perspective, I think is
I was going
right.
to say, you can answer that. You're one of those people.
Yeah, I mean, the more I think about it, the less that I do actually buy into the project of allowing, bureaucrats in a different country, whether it be Brussels or Zimbabwe or Morocco. It doesn't matter where it is. But the more I think about it, the more I kind of I understand the fight against allowing those that system to decipher what should be going on your own shores. So if it's about trade, then why is Boris Johnson so bullish? Well, he's doing some deals. Yes, he's doing some deals with the United States, or he's doing a Donald Trump and he's taking a risk. He's doing what Donald Trump did to China, and he's taking the risk. He's saying he's going hardball, and it's who breaks first. The EU are obviously a lot bigger than China in comparison to what America is to China. The EU is a lot bigger than the UK in comparatively speaking. But there's still, the UK still has some trading partners out there. So I don't think it will be as bad as the Armageddon that was initially kind of pronounced for the UK. I don't think losing trade deals with the EU, but then being able to do trade deals within the Commonwealth and with America and Japan would matter too much. But it's proximity that's the key, isn't it? It's right on the UK's doorstep, and I think that's the problem that a lot of people have got with it, is that they are, a hop, skip, and the jump over the water. So as I said before, the small businesses will be the ones that suffer. But I think Boris Johnson does also know that it would be bad for Europe to not do a deal with the UK. As much as it's going to be bad for the UK, I think he's banking on the fact that that it's going to be bad for Europe. So this no deal chatter, I think he's basically saying Theresa May got it wrong. She was too weak. She went in to be far too conciliatory with the EU, and I'm not going down that path. I'm going to go in and see if I can get what I can, because they've got until December this year, and that means he's got bending room. So start hard and then start, coming back from that particular position. There's very little chance, I think, that he will renege on some things. But one of the big things is European alignment with goods and services on standards. And what Boris Johnson is effectively saying is most of our standards, or a lot of our standards, are actually higher than they are in the EU. So we don't need to sign a deal. We don't need to sign a contract to say that we're gonna stay within these particular standards. We can just have an agreement to say that we will. So I think that's some of it. I think he's trying to avoid actually signing more treaties. He's effectively saying let's have a gentleman's handshake rather than having to sign treaties. And I think for something like the UK, that seems to me like that seems fairly obvious. It's not like we are a country like Iran, who or dare I say China, who are quite happy to kind of like have lower standards because it's better for the country. That the UK is just not really like that, and the EU know that. So I think that's
into capitalism too.
Yes,
to go that route.
Yes, exactly. So I think there's an element of saying, look, come on, be sensible here. We're not this a country that is just going to all of a sudden cut down on regulation just so we can do more deals, because the UK public just won't go for it. The biggest argument we've had here is for chlorinated chicken, they call it. Chlorinated chicken that we buy from the United States, and people are up in arms about that, And when you say, do you want to eat chlorinated chicken, then of course people don't. But what it actually is a chicken that's been washed in chlorine, and a lot of our fruit and veg is washed in chlorine already. So even that, if you put a headline on it, it makes it sound a lot worse than it actually is, and it makes it sound like, what's that? Sorry, mate.
I say they're very good at that.
They're very good at it, yeah, because it makes it sound like our food standards are going to drop, but as I say, I don't.
But they're already low, so it doesn't matter.
Yeah, well, things like that with chlorine washed, fruit and veg. There's no.
The whole Western world is.
Yeah. Yes.
Is in that same boat,
Yes. Of mass production. Yes.
Our water supply, to start with, is treated.
Yes. Yes.
We don't drink untreated water.
Yes.
I think in Australia it's fluoride more than chlorine, but I've got no doubt. I used to run a swimming pool, not run, but I used to assist at a public swimming pool. The amount of chlorine that we pumped into that water just to make it habitable, if I can use that word, was just crazy.
Yeah.
And you can imagine how much gets pumped into a water supply to keep that in, let's call it, potable or potable condition. It's not a secret by any stretch of the imagination. And many conspiracy theorists will tell you that we're being controlled by that. The dentists of the world will tell you that they've had far less dental problems since fluoride started being used as water.
Right.
But at the end of the day, if you're not making your own vegetables, then you're kidding yourself if you think you're getting absolutely pristine, fresh fruit and veggies. It doesn't happen.
Yeah. Yeah. I totally
bear of bad news, guys.
No, you're absolutely right, man. And the world's consumption just can't be sustained. If we were to go down, completely, pure food and liquid, it's just gone past that, really. So they obviously use methods to make sure that they can mass produce.
Very, very, very sadly.
Yes. Yes, absolutely. Good morning, LT, by the way. Good morning. But yeah, so that's where we are anyway, mate. That's where we are with the pound. The pound is, Boris Johnson is tough talking, and it will drive the pound down. But let's just have a look at Forex Factory, because it would be a little bit of a surprise to me to see the pound break down before Wednesday, and
here we go. Do you want me to share it?
Yeah, go for it, mate. Either way is fine.
Screen 2, go there.
Yeah, so there you got Wednesday. You got the final services PMI. I'll tell you what, that Caixin Services PMI out of China is going to look like an interesting, interesting number. Yeah, so and obviously we got ADP and we got non-farm as well this week from the from America. But that would be the point on Wednesday. That final services PMI would be the point on Wednesday. That I would be surprised if we were to break down before that particular number. The numbers, as I said, from the pound would have been fairly solid. So let's see if the pound will bounce here. I mean, obviously, we should be looking at short. There's no two ways about it. Boris Johnson has created a situation now that suggests for another battle and potentially another no-deal scenario back on the table. And that's what people have been fearing all along. And the fear is back in the game with that. So we should be looking at the short, and yesterday's bar. You don't need much more than yesterday's bar to tell you that we should be looking at short, really anyway. But yesterday's bar really doesn't create us a selling opportunity because it's a bit bearish and it's right on a buy zone. So my opinion would be let it bounce, and after it's bounced, then look for the short in the pound. Probably on Wednesday after that number's either been released, if there's an opportunity, and if there's not an opportunity, let's not get overexcited just yet, because there might be something else around the corner that people are waiting on to sell this particular currency off. But right now, I'm not particularly bearish on the pound in the near term, as in the next 24 hours. But I think after that, then we should be looking short pound. But I don't think we need to get excited just yet. Now, what could happen, of course, is that the pound breaks down today, but then we look for tomorrow for the bounce, and then we go short. So you're either going to sell here after tomorrow, after a bounce, or we get a slightly better price to go short, and then we can see if we can actually get through the level. But rather than trading at this particular point, I think that's a bit too dangerous.
Yeah, I can't go short here, and that's why I said before, the short for the breakout trade is a terrible place to get into the market. But once that breaks, mind you, if we could actually stay in the trade, and I doubt that would be the case trailing on a 15-minute chart, because there's bound to be some selling going on at that point. But if that were to be the case, then look out.
Yeah.
This could go. We've been, I guess, rallying on the back of, okay, Brexit's actually going to happen, and Brexit actually did happen, and foolish me thought, oh, thank God, we can breathe a sigh of relief. We can actually trade technicals for a while without worrying about what's going to happen next. No, boom, boom, incorrect.
Yeah.
Here we are again. So we're back in pound caution mode, I think is probably the best way to put it. But you know what? I think I'm going to do exactly as I've done in the lead up to Brexit and through Brexit, and that is just keep putting boxes on my chart. And if I see higher lows and if I see lower highs, I'll just trade from the bottom to the top and see what happens. Yes, there'll be breakouts. And maybe this is one of them. Maybe it's not. I don't know. I really don't know. Taking on board what you've just said, Ash, again, it is difficult to be bearish, to be bullish, but you don't really have to be bullish to trade ranges. You just trade retracement.
No, you're absolutely right, mate. Yeah, absolutely right. That's got to be the answer, isn't it? To trade the range. It just in other news today, we've had Hong Kong confirming a death as well. China cases top 20,000 on the coronavirus update. We also had a request from China to effectively get back around the table a little bit about this trade spat with the United States, because actually they're going to struggle. I think was the report that I read. They're going to struggle to meet the requirements of the trade deal because of what's happened with the coronavirus. So they want the United States just to be a little bit easier on them when it comes down to some of the negotiations.
You could understand that request, and certainly an unimpeached Donald Trump has to bow to that, one would have thought.
Well, this is the interesting thing, isn't it? Has Donald Trump's tactic always been to get China over a barrel? And does this actually give him the leverage that he
Oh,
needs.
is he that bad? Is he that bad a man? Could he possibly do that?
I wonder, mate. I don't know. I don't know. I mean, it's funny, isn't it? Because either he gives them what they want, and we see him being
Benevolent.
yeah, benevolent, and actually building some, a decent relationship with China that way, or he squeezes them, destroys the relationship, and we're really back to where we started again. So I honestly think it's going to be tactical. I don't think it's going to be whether he's a good or bad man. I think it's going to be a complete tactical play from him, because really, when it comes down to it, he's now got he holds the cards again, doesn't he? Which is what Donald Trump always wants. So what does he do from here on in? So I think this is going to be an interesting play from him. But that they have requested that, so we'll see what happens there.
I think he'll play it smart, and he'll come out looking roses. I think that's probably the way he needs to go. We've got an election coming up, don't forget.
I agree. Yeah,
he needs to be smelling rather sweet, I think, rather
yes,
than on the nose, and I think that's well. But I'm no economist. I'm definitely not qualified to comment on that, apart from my opinion.
Yeah.
But that's the way I see it. Surely he's got some compassion in his body. Somewhere.
Yeah. Well, we'll see whether it comes down to that. The other thing, obviously, in the news was talking about the election was the Iowa caucus last night, where they were voting on their Democratic candidate, and that seemed to descend into a little bit of chaos. So it doesn't seem like.
I was actually watching a bit of Bloomberg there earlier.
Oh yeah,
and they were depicting how this wasn't happening. They couldn't get this going, and it sounds like an Australian federal election last time, where we attempted to use technology. No, didn't work.
Yeah. I think that's the case, and I mean, I looked at the candidates yesterday, and I have to say, nobody looks particularly strong. It seems like a fairly weak race for the Democratic.
Are you saying that they've conceded already?
To be honest, I think it's a bit of a shoo-in right now. I don't see how I really don't see how the Democrats are going to get anywhere.
Nor do I.
So to a degree, I suppose they have conceded, but let's see what happens with that one.
Yeah, there'll be someone with a whole lot of money that's got a different opinion on that.
Yeah,
they can't give him another go and all the rest of it.
Yeah.
They will fight. There's no question. I wouldn't have thought.
Yeah, they certainly will, mate. They'll be going for that. So
is that about the roundup, mate?
That's the roundup of news, yes, and what might be driving the market. We certainly risk on today. I think we should look at the Aussie, which I'm sure you're going to do. Somebody was saying to me the Aussie is an interesting chart, actually, isn't it? Because we have hit those weekly lows, and we are bouncing at that particular point. Did we have a rate hold? Was it over the overnight?
Yeah, rate hold and a very cut and paste type statement from Philip Lowe. So I don't actually know why. Well, I do know why the Aussie rallied, because they were expecting probably a little bit more dovish statement. But gee, I think it's the higher it goes, the more I like it, because I think it's going to give us a real good opportunity to trade this short. I tried yesterday to sneak a little short in, and I flagged this to you guys in the show as well. Didn't work, and I was looking to trade the break and retest of a little trade line coming through here. And I did say this at the time. This is really early, and I don't know that this is enough retracement. Take the RBA thing out of calculations, because nobody knew that at the time, but. This was the first opportunity to get short, right? Or back into the short. Already been short from Friday. Pardon me. But we got the break and retest, and then got into a bad trade, of course, and the rest is history. But that was only first opportunity. There'll be more than that, I can assure you. There'll be more than that. And here we are, banging on a resistance level once again. What I need to see is not hit a resistance level, but to break the resistance level, then come back underneath it. That's what I need to see before I'm convinced that we're going short again. This is probably the second level where you would expect to see a potential turnaround. I'll see if I can use my pen here. Didn't want to do anything before for some reason. Pen. Oh, there we go. So first retracement level there. That's the one we tried to trade yesterday. Failed. Second retracement levels here. That's bang on a confluence area. So I would be happy to trade that, but I need to see something that suits me. I definitely can't go long here, I can promise you that, because we're at a daily resistance number 3 level. So despite the fact that the next level for me of potential bouncing is monthly pivot, I can't trade to there, no way in the world. So what I really need to see is price break here and go to the monthly pivot. By all means, I'm happy for that to occur. Then come back underneath and retest that area. Once that happens, you wouldn't be able to stop me going short here. Obviously taking profit before the lows. But that's how I see this all starting to unfold for me. Could it go a lot higher? Absolutely. Any currency can do anything at any time. Do I expect that to happen? And can I make a case for that? No, I can't make a case for that at all. Yes, we've got a big bullish engulfing bar here on a 4-hour chart. On the daily chart, it looks as though we've got a bit of a pitchfork turnaround, I call it, or a tuning fork turnaround. Got no idea if you've got a candle pattern for that, Ash. But all I see is this going to a resistance level, and I'm actually super glad, and I called for this yesterday. I said if we can possibly get a decent response to the RBA statement, then I think it's going to present us with a wonderful opportunity to trade the Aussie short. I'm on Aussie yen there, but take your pick, really. I think anything that sets up for you, the way you trade and the way you get into the market, I'd be more than willing to trade the Aussie short on just about any pair. Pound maybe just a little bit different because of what we've just discussed. But again, technically, if I look at the pound, well, let's look at the pound Aussie. Pound Aussie's coming off big time, as you can see, and that's a combination, of course, of the Aussie rallying and the pound tanking. Where can it go to before I start to get interested in the long? Well, that looks pretty clear to me as well. And that level, if I can actually get this line, there we go. That level's in here somewhere. So we've got a fair way to travel before we get to there, down to around about the 1.8760 mark, maybe even. Pardon me. I'm joking, mate.
Oh dear.
Give me 2 secs.
All right, no problem. Where were we? We were looking at the pound Aussie. Oh god, I mean, look at that on the pound or the pound really. God, that was the trade, wasn't it? If you kind of got the Aussie right, the pound is obviously the kind of the weak kiddie. That was the trade, really.
Yeah, look, that's a scalp really for me, not a trade. I've been a scalper in the past in my own mind, but never on paper. And it's more or less a swing trade as well, isn't it? Get to a strong resistance level and then just sell. Limit orders, they're kind of funky. I find it very difficult to trade them, but pardon me, where do we go from here? We've hit a strong resistance level, or have we? Let's call that a cloud of a zone, and yes, I think we have hit that resistance level. It's the $2 mark at the end of the day, or just above it. Where are we? $2, very, very close. So maybe there's a little bit more in this. I think I said that a couple of weeks ago as well. that maybe we're headed to the $2 mark, which looks, and you don't really need to look because you know it's going to be a big figure. I don't think I could trade beyond that, frankly. But I'd like to, if you understand what I'm saying.
Yeah.
What I'd really like to see is pound Aussie get down to here, and then I can trade it back to the top of that channel. But yeah, I don't see that happening anytime soon. Stranger things have happened, I guess. But I find it tough, Ash, at the moment to think pound anything because of what we've just discussed, and take away what Boris Johnson's saying, and now what the demands are coming out of the EU. The pound should be stronger than it was, let's say, a week ago or 2 weeks ago, before the actual deal was done, or the Brexit actually occurred.
Yeah.
But now we're back in the mud fight and the mudslinging and all the rest of it. So I don't know. I'm just completely let's stay away from the pound mode, I think, until we see something that really suits us. And at the moment, there's nothing there that suits me, I've got to say.
Yeah, I totally agree, mate. And really, if we look at the bigger picture with the pound, then it's still in this kind of it's still languishing a little bit, isn't it? It's not in a particularly healthy zone. That monthly spot's at 1.3260. That looks like a resistance zone, and it's just failed at that resistance zone. So really, it is due to come back, and I'd say anything around about the 1.270 would be an area that I think the pound would be. It's a natural point to from what I can see where it might actually start to support itself, but it does have some room to come down here.
It certainly does. It's bouncing off a strong resistance trend line to start with, but to read it and to actually make sense of it is very, very difficult, because higher high, lower high, lower low, lower low, higher high. It's all over the shop. So very, very difficult to pick, but I think that's probably the major thing on the chart, isn't it, really? That trend.
Yeah, absolutely.
It really is. And where's the retracement to off there? Where's the bounce to off there? I guess is the question. Let's see if we can find that.
Yeah.
It's probably in here somewhere, I would have thought. So where are we there? We're back to 125 and a half or 126 maybe. But I think that's probably where we're at, in there somewhere. So on that basis, okay, let's say 127. We're 250 pips away from there. I can see that happening. And if that were to happen, maybe you can think another attack at this trend line. But it is very difficult to say long here, isn't it? It really is.
Yeah, I think you're right. I think
Okay.
you're right.
I really hadn't looked at it on that basis, but it's definitely worth that. All right, so I'm going to leave the pound alone, apart from the breakout trades, for a little while, and I'm just really focused on the Aussie, because I think it's so weak and it doesn't have any reason to rally. And what was said today in the RBA statement doesn't change my mind in any way, shape, or form.
What
so
was
I really
said in the RBA statement?
Sorry?
What was said?
What was said was we're going to monitor things and react accordingly. There's every chance that we'll be in a period of low interest rates for the foreseeable future.
Yeah.
Don't quote me on that, but it's words to those effect.
Yeah.
And the coronavirus has now come into play. No mention of bushfires, I don't think.
Do you know, it is really interesting, isn't it? Because there was somebody, I can't remember who said it, but somebody at Davos said that the period of boom and bust is over. And then all of a sudden the market, started to come down. It hasn't tanked by any, it hasn't changed to a bearish market by any stretch, but it has started to come down, and we might be near or at a top right now. Certainly for the year, but possibly for the first quarter anyway. And there's always this glaring issue with the amount of liquidity that has been pumped into the market and the fact that we've got these low interest rates. What happens if there is a bust? Can they fix it? Will they have enough tools the next time around, or are they kind of out of bullets? Because things
Well,
can't.
that's why they're all screaming for fiscal assistance, isn't it?
Mm-hmm.
They now need help from the governments to give them enough, as exactly you're saying, enough wriggle room if the shit does actually hit the fan.
Yeah.
And they're running out of aces. There's no question.
Yeah. It does seem like that wiggle room is diminishing, though, isn't it? I mean, what will governments do as well? What kind of powers do they have? What do they have? What tools do the governments have to help things out here?
Well, unless we get a global financial crisis Mark II, then those who have managed their economy, their economies and their cash flows prudently, I suppose, will be in a far better place than those who haven't.
Yeah.
In the case of Australia, for instance, where they've been pumping for surpluses that haven't happened, but that's what they've been trying to achieve.
Yeah.
For obvious reasons, so that we do actually have something in the bank if the SH1T does hit the fan. And I think that's probably a very prudent approach, because if and when it's probably more a matter of when it does for Australia, because of and you've spoken about it, Ash. We're talking about, and I heard today that car manufacturers are talking about no fossil fuel powered cars by 2035 now.
Right.
That's interesting. That's going to put a hell of a dent in commodity prices out of Australia, out of Canada, out of New Zealand, anyone who's got all of those resources at their fingertips. So those sort of things are very, very much a pressing thing for economies in commodity-based countries. For instance, those who can produce their own produce are probably going to have to look at that and have a policy that's non-import based, I would think, because they're not going to be able to afford to buy things. Their balance of trade is going to be up to crap. So that's interesting, when you think of that macro picture as to this quantum change, which is upon us. No coal, no oil, and it's crazy to think right now that can happen in 15 years, which is what now the car manufacturers are suggesting. 15 years doesn't go very slowly, it flies past. So positioning yourself for that in terms of governments is extremely challenging, I would have thought, especially if your country relies heavily on commodities. So that's again going back to my extreme bearishness on the Aussie dollar. I don't see where the saviour is for the Aussie dollar. I don't see how it can possibly come out of the doldrums unless somehow, somewhere, somebody wants a whole heap of coal anytime soon.
Yeah.
Iron ore prices have crashed. Don't know why that is the case, and we supply a heck of a lot of iron ore to the world. So bushfires, I just keep saying it. Everything that I see adds up to a falling Aussie dollar.
Yes.
And I just can't believe that it's rallied in any way, shape, or form. But I'm glad it has.
Yeah.
Because I think it provides with a good opportunity.
Yeah.
I think I got a bit off the track there by waffling a bit, but
Well, no, mate. I think what we're talking about is the potential for all of this stuff, the risk on mood that we've got in the market today to be more about relief than it is about actually switching the trend. But I guess back to the point, if things were to collapse, and governments and central banks don't have the tools, then the collapse could be pretty damaging for a lot of people.
Absolutely. I think this goes back to a Trumpism, where maybe he's cleverer than we actually think he is. He's purporting to make America great again, right?
Yeah.
And that was his mantra, and that was
Yes.
his whole thing. What he actually is saying is, let's produce enough for us to self-exist, or
Yes.
to be self-reliant.
Yeah.
What a good idea!
Yeah. Yeah.
Because if the SH-1T does hit the fan, then trade becomes, extremely difficult. And the more resources that you have at your disposal, then the better off you're going to be, surely. And if you can feed your country, number one, there's the basis for, well, there's the base. That's the number one thing you have to do, is you have to feed your country. And outside of, well, gee, I'm getting deep here, mate. But it's a real thing. It is a real thing.
I totally agree. And if every country focused on that, we'd probably be okay, wouldn't we? Nobody would overextend themselves.
And that's pretty much where Trump was coming from. If we can support our own country, then we're on a far better standing. And I think the world probably needs to have a very strong look at that. Consumerism and capitalism. Do we actually need 5G? Do we need 4K TVs? Do we need all that? Really?
Yeah.
And the Western world is saying, of course we do it. We give it to me quicker than now. I need it yesterday.
Yeah.
So I don't know. This has got very little to do with what I'm trying to trade today, I suppose. But at the end of the day, I guess it probably does.
Yeah.
Mate, I better turn to the charts before everyone just leaves us.
Yeah.
And we've got dollar yen. Everything's retracing, guys. Everything that I'm interested in looking at is retracing, which is fantastic, because we got to a point where everything was untradeable. If we come to the overextension parts of currency pairs, we've got to have retracement, and that's what we're getting. So dollar yen, we're still in this trade on the weekly chart. Couldn't be happier that, well, obviously I could be happier if it got down to here yesterday. It would have been great, but love to see the retracement. And look where it's retraced from. Is there a surprise here? Is anybody surprised? No. That's exactly where it needed to bounce from, and that's exactly what it's done. What will I do? I will look for exactly, and this is going to be the theme across exactly what I'm doing for this week. I'm looking for break of either resistance if we're short based, and then come back into the game, or if we're long based, then a break of support and then go long again. So I'm looking at these things very, very closely. Dollar yen's one, and if dollar yen gives me something like a retracement to a strong level, let's pick a strong level. Let's call it, that looks okay, pretty much where price is. It doesn't have to go too much further. The gap's been filled. We are still coming off this lower high here. We've got a lower high, lower low, potential lower high here. This would be just fine for me if I could find a way back in. The way I would do that is, and the way I always do that, is look at my trade lines. Probably a big ask to come back under here and retest, but that's pretty much the picture I'd like to see. Why? Because we've got three pivots sitting here, so we've got to get rid of the support level. To get rid of the support level, we have to break back through it, then retest it, and an entry in this area here makes perfect sense to me if we're thinking of adding to our short position. So that's what I'm looking at on dollar yen. Aussie, it doesn't matter for me on the Aussie pairs where I find it and on what time frame I find it. But if I find it and it's exactly the same, break resistance, find a way back underneath it, then retest it, go short. That's going to be the theme. Exactly the same applies here. We found resistance, we've broken resistance, but that trade line is now not negotiable because it has been violated twice, but that one's now valid. So back underneath here, underneath the weekly pivot, retest the pair short. Aussie US dollar, same, back underneath resistance, retest it short. There's probably a better opportunity. Let's see where that lies, maybe through here. So it's kind of, name your poison. Which Aussie do you want to get short on? This is the one probably that looks best at the moment, Aussie US dollar. Why? Because it's bouncing off the weekly pivot. So a little bit more consolidation here would be good. Back underneath, retest, away we go. I'm leaving the pound pairs alone. So I'm probably there. I want to have a look at the euro though. As always, we have to have a look at the euro. And the euro is in a similar position to the Aussie, in my humble opinion, not as badly positioned in terms of bearishness. Gee, I'd like to see it pop up and hit that monthly pivot. That would have been good. What I see here is the failure for this head and shoulders that we spoke about a couple of weeks ago, nearly a month ago now, to actually have unfolded to a large degree. I can't quite understand why we haven't hit the bottom of this range coming off that, what to me was a very clear reversal situation. And we spoke about this candle here, how that was a beautiful candle to trade. But the target had to be down here. So why this has happened, why the euro has rallied against the US dollar is quite a mystery to me, as is Aussie. So all I need to see here is a reason to go short. At the moment, I don't see that on the daily chart, because that monthly pivot would have been a great opportunity to come back underneath the trade line. In fact, what I do see is this big rejection bar here. But I also see that there'd be a lot of people looking at that going, okay, I've got to buy here. And that hasn't happened. That has not happened. This is a 4-hour chart. So we've gone pretty much a day without these buyers coming in. Why is that the case? Great question. Again, what I'd like to see, price get up to here, let these buyers come in and drive it to the monthly pivot, then come back underneath here and retest it short. That's the euro for me. You can probably, this is better still, euro yen. In fact, this 4-hour chart, I don't know if I'll trade this one. It'll depend on how big the candle is. But if that were to stay as it is now, I would consider placing a short underneath it. But the problem is we've got 2 pivots sitting underneath. So that's not a great reward to risk trade here. I'll look at this tomorrow morning on the daily chart, however, because you can see that this is a clear breakout. And and we're underneath the pivots here if I were to go short. Bad reward because we're only looking at the bottom of the range. But if you look at what we traded on dollar yen on the daily charts, this one here we traded, remember, we traded short underneath here, and we cancelled that order, or we didn't cancel it, it went kind of way too long. But then we changed that to the weekly chart and traded exactly the same thing. We traded the breakout bar short underneath it. Well, this is looking exactly like that, is it not? Except it's looking rather large. So your reward on this is going to be very, very small. So it may not be the one to take. We shall see. Ash, I don't think there's anything really that I want to look at other than those. Still super bearish, the Aussie, and any setup from now is good to take as far as I'm concerned. I love the fact that we've rallied as far as we have.
Yeah. Yeah. Okay, mate. Well, yeah, that's pretty much me as well. I don't think there's anything else to report over here. As everybody knows, I am short the FTSE 100, and I will continue to build into short positions. But for right now, it's on a bit of a rally, which in many respects is a good thing because it just means that I get a better price. I will change my opinion if we break.
We're singing the same song, mate. I think.
Yeah, I think we are. Yeah, I think we absolutely are. We're just looking at this particular move to the upside as a relief rally rather than anything else. I don't really see the fundamental picture of having chain dip to the downside, and then we'll see what happens after that. But yeah, I'm definitely on a short.
Happy days, mate. Let's get short if we can.
Cool. All right, guys. Well.